Okay, Sunday, 5th of April, 2026. So Adrian's daily vlog, sharing smart stuff men should know. Bitcoin is the apex predator in finance. Opportunity cost of capital. So this is a very profound and damn important metric to understand and measure Bitcoin via the opportunity cost of capital heuristic, metric, etc. Meaning you have two options. Option A, you got £1,000, $1,000. Option A, it doubles the money in 1 year, let's say. And option B, it triples the money in the same year. So $1,000 turns into 2,000, other one turns into 3,000. You make money, that's undeniable, but the opportunity cost of capital is 1,000. 3 minus 2, 1,000. The opportunity cost of choosing A rather than B is that $1,000 less. Now, that lens is damn important to understand fundamentally how Bitcoin is the apex predator. So because of Bitcoin's first principles, money you can own, money you can spend, apolitical, decentralized, censorship resistant, and with a fixed supply, because I always say Bitcoin fundamentally is maths, physics, and computer science, open source code. Everything else on top of that is game theory and psychology at play. So as you understand the first principles more, you understand that everything is the 0 to 1 principle. Everything else down here, pounds, dollars, euros, are kind of the same with flawed first principles that are nothing compared to Bitcoin. Bitcoin's up here, even in a sense of a 21 million fixed supply. Auditable, measurable, quantifiable, we can see it, fixed supply. Pounds and dollars, no limit. Quantitative easing, fractional reserve lending, there's no limit. Is that meme, really? Bitcoin has no top because fiat has no bottom, meaning there's no limit to how much fiat can exist, pounds, dollars, euros, rubles, rupees, you name it, pesos, whatever. And there's only a fixed supply of Bitcoin. That's a big fundamental first principle difference. So, as you understand the first principles of Bitcoin, again, open source code, maths and physics, and then you understand opportunity cost of capital, you then start to think and realize that, well, on the long term chart, there are no bull or bear markets in Bitcoin. It's only adoption at a deeper meta level. There is no bull market. There is no bear market. That's just time frame bias, we could say. There's just only adoption. Every day, the network gets stronger by about $40 to $50 worth, and over time, as more technology and plumbing is, more financial instruments come online, and the more they're around and the stronger they are, more reputation, more trust, etc. The game theory only points to one way, which is Bitcoin adoption, meaning more people are going to want to buy Bitcoin en masse. Now, then you could say, right, as you understand the first principles and the game theory at play, meaning everyone's going to be using and buying and needing and wanting Bitcoin, and there's no limit to how many Bitcoin you want, fundamentally. How much air do you truly want? At what level is too much air? At what level is too much money? How many clothes is too many? How much water is too much, so to speak? I'm always going to want to need more. Life. So then you say, right, if there's potentially infinite demand for Bitcoin, and the supply stays the same, 21 million, mathematically proven, mathematically fixed, open source code and maths, what does that tell you? Supply and demand. Supply stays the same, demand goes up. What happens to the price? Only goes one way. And yes, of course, there's going to be temporary blips in bear markets and things like that here and there, sure, because life is humans. Bitcoin isn't volatile, the human side is volatile, the trade is volatile. So then you say, right, as Bitcoin can only go one way, and that's up and to the right, and it's got a fixed supply, so then why would I invest in this asset, so to speak, or allocate to this asset whose first principles are flawed, i.e. pound, dollars, euros, fiat, unlimited supply, and this over here has got a fixed supply? Then you realise that, well, actually the whole world has to squeeze into Bitcoin. Therefore, in finance, what's called the CAGR, the compounding annual growth rate of Bitcoin, i.e. the new hurdle rate, is infinitely greater than anything out there in the world. So then you say, right, if I hold this asset for, pick a time frame, 5-10 years, versus Bitcoin for the same time frame, you'll realise that actually Bitcoin will outperform everything. Everything, because the first principles are completely different. Therefore, you realise that on a long enough time frame, there is no other asset worth owning apart from Bitcoin. Gold, no point. The supply is not known, it's not clear. And it's physical, so it's not the same first principles. Tax structures or ISAs or Roth IRAs or you name it, things like that, or even stocks and all the rest. They have third-party risk. They have the first principles again that are flawed with pounds, dollars and euros. So then you realise that, well, actually, Bitcoin is the apex predator because nothing else can compete with it, nothing else can beat it on a first principle basis, and all the dynamics are pointing towards one way up and to the right, the supply and demand dynamics. So then you say, at a deep level, there is nothing else worth owning apart from Bitcoin. That's quite a statement. But we can go a bit more nuanced to say, well, some things are worth owning. Land, for example, clothes, because it has a different utility, different purpose, or different time frame, or sentimentality, or a specific technical reason. So, for example, you could say, well, why would I bother with food? Then you could say, well, I needed to survive. I needed to survive so I can earn more Satoshis. It's that kind of trade-off in the short term, and that kind of trade-off to say, what's more important than the Satoshis? Well, you could say the health, the wealth, the time, and beyond. There we are then. So the maths just points to it and says, it's not worth it. Therefore, the signal becomes clearer and clearer to say, acquire more and more. There is no other alternative. On a long enough time frame, we could even say, because of its first principles, i.e. maths, there is no entropy with Bitcoin. Unlike with, say, land, weeds, property, it deteriorates. Stocks, third-party risk, scandal risk, tariff risk, you name it. There's third-party, there's entropy in some fashion, but maths doesn't entropy. Physics doesn't entropy, so to speak. And you could also say the 21 million, because it's maths, is fixed. There's no deteriorating. That's not going to deteriorate over the next 10 or so, 50 years to 20 million, for example. No, the first principles are the first principles. They're fixed. Therefore, you realise that nothing else is worthwhile owning because the first principles reflected or viewed through the lens of opportunity cost of capital dictates it's not worth it. This, not worth it. That, this share, that ETF, that bond, that property, that land, not worth it. The first principles don't add up, even deeper to say liquidity. Buying this land here would take months, years even, let's say, to buy. But Bitcoin, because it's liquid, buy it in minutes and moments. What's that? Things like that. Or I want to move, a war, for example, from this country to that country. I can't take my land with me. Can't take property with me. And the shares are questionable because it's technically owned by a subsidiary. You only own a claim to it, legal but not title claim. No, you have title but not legal, that's it. You can't take that with you. But like in Dubai, actually, I think about it, the issue with the gold, they can't quite take those, I'm not playing with them. But what about a thumb drive here? Yeah, put it in your pocket, no problem. And then you can go deeper to say, well, go deeper into the first principles to say, with Bitcoin, you're moving value through time and space. To say, with fiat, because it weighs next to nothing, like 1 gram, but it loses purchasing power over time. Okay, so through space but not time, you know, 100 pounds weighs 1 gram, let's say, or a credit card weighs the same, but not through time, melts away. First principles again. But gold is the opposite. You move through time but not space. 1 gram, 10 pounds of gold versus 100 pounds of gold versus 1,000 pounds of gold weighs a lot more. Not practical. But gold has both. Bitcoin has both. Wow. That's why it's apex predator. Because in terms of first principles, nothing can beat it. And first principles expressed through opportunity cost of capital, nothing can beat it. Wow. Now, we can go slightly deeper to say, in this current epoch, in this current market structure, maybe in 15 to 30 years, when more companies go onto a Bitcoin standard in some fashion, then there'll be some interesting nuances then with regards to own this company or that company. This company is doing interesting stuff with Bitcoin, built on top of Bitcoin, leveraging Bitcoin. And this one over here does stuff as well with Bitcoin. There'll be more nuances then, but that situation, that scenario will require complete different metrics that don't exist today on how to measure those companies. KPIs that don't exist today will have to be devised so as to value those companies. But I still think at a fundamental level, and I'm talking 15, 30 years from now, it'll still be worthwhile owning a spot Bitcoin self-custody. Because you could also say at a deeper level, the self-custody is the revolution. But that's a whole other conversation. But that's powerful. It's the apex predator because nothing else can compete with it on a technical level, on a mathematical level, a technical level, and a first principle and physics level. And when analysed through opportunity cost of capital, it doesn't make sense. You'll be missing out on the gains. You'll be missing out on more gains with fewer risk, as in risk factors. So third-party risk, for example. So you could say, well, this company outpaced Bitcoin on this short term, on this 1 month chart, for example. Yes, but that's 1 month out of a decade and a half, 16 years. Because when in the market, when in doubt, zoom out. When in doubt, zoom out. The trend is your friend. And I did a video, a few months ago now, saying that there's 1,000 charts screaming at you about what Bitcoin is doing. Pound, euro, dollar, peso, ruble, rupee, yuan, you name it. They all have the same pattern. Down, going to zero against Bitcoin. And some currencies have gone to zero. Indian rupee, for example. 1 Indian rupee can't even buy 1 single Satoshi, basically. That's it. So everything goes to zero against Bitcoin. That's the maths. That's the conclusion based on the maths, combined with the game theory. So then you say, right, nothing's worthwhile. Again, unless it's got a specific technical reason. I want food, I want clothes, for example. That's fine, to live. Glasses to see, car to drive, things like that. But apart from that, nothing else makes sense. Nothing else makes sense. Through opportunity cost of capital. You'll just be missing out on money and gains over the long term. So you could say, buy this land today, £1 million or Bitcoin today, and in 15 years, because you can go deeper to say, right, well, if it's appreciating at, say, it's the rule of 72, really. Rule of 72, it's appreciating at, say, 7%, it's going to double in 10 or so years. But if Bitcoin's appreciating at, say, 20%, it's going to appreciate in, what, 3? Yeah, basically, double in 3 or so years. Now, that's the general idea, that's the general gist. And it's not going to be a comfortable ride, but you could say that's the price of admission. That's the, you could even say in one spiritual way, it's the baptism by fire. But that's another conversation altogether. But that's the equation worth doing. Opportunity cost of capital to say, is this position worth taking in the long term? This asset, that bond, that company, that ETF, you name it, versus Bitcoin. And the answer consistently was no. It doesn't beat holding Bitcoin. And going further to say holding spot Bitcoin self-custody. The maths just consistently points to it through opportunity cost of capital, backed by the first principles combined with game theory. Wow. Sublimely, it's the same conclusion I keep coming to. And that's it. Hence, the apex predator. Nothing is worthwhile. Diversification is there's no point to it. There's no point to it. It's worsification. If you've got this asset, and it's the best performing asset there is, because of the first principles, supply and demand dynamics, diversification makes no sense. Now, as I said earlier, maybe in the future, when different companies are using Bitcoin in their own way, yes, new KPIs will emerge, but that's 15, 30 years from now. That's a whole other conversation. But nonetheless, Bitcoin is the apex predator. Ignore, reject, laugh, deny Bitcoin at your peril. And I did a video about that as well, actually. The wrath of 1,000 bankers be upon you. Wow. Ignore it at your peril. I did a video as well about this, actually. Rocco's basilisk. And the ontological shift behind Bitcoin as well. Meaning the things that are going to emerge because of these first principles, many people's minds will be just blown away. Like thinking, how is this possible? This can't be happening. The epistemic contrast, their mental model of reality versus what they're seeing in front of them, will not compute. And their minds will just be blown away. Just, what the hell? How is that possible? Against the first principles. There was a nice little joke I heard recently that nicely sums up Bitcoin in some way. 3 fish are swimming. 2 young fish that way, and an older fish that way. And as the old fish passes by, he says, "Morning, boys. How's the water?" And the 2 fish ask themselves, "What's water?" Meaning, you're so used to the financial system as it is, pounds, dollars, euros, banks, whatever else, and they're all basically the same ums and ahs, you don't realise what true money is, what the revolution is, how different, how powerful Bitcoin is. I even saw another tweet recently that compared Bitcoin to penicillin, to say the doctors in the 1940s didn't believe penicillin was as powerful as it could be because their preconception of what the solution would be didn't match with reality. That's the ontological shift as well, at a deeper level. The solution ought to be that, but what's this? Why is this thing doing what it's doing? Why is it trading as a, now which one is it again? Risk on, risk off. There's a risk off asset in light of recent geopolitical events in Iran. Wow. Risk off as in taking risk off the table to reduce your exposure and risk and volatility in general. Hence, more people viewing it, Bitcoin as a safe haven. That's powerful stuff. But that's a whole other conversation as well. But nonetheless, yeah, Bitcoin is the apex predator. Ignore it at your peril. Yeah. But otherwise, Adrian's daily vlog, sharing smart stuff one should know. Subscribe for more, and you will see me tomorrow.